Kotak Mahindra Bank, top gainer on the Nifty, rallying over 3% after a strong first quarter business update. Loan book growth is higher than its consensus estimates. Deposits too higher by 14% year on year.
But tightens the top Nifty loser. It's down close to 4% as it reports softer growth in the first quarter compared to its peers. The company says that consumer sentiment was hit by volatility in gold prices.
Textile companies like Gokaldas Exports, KPR Mill and Arvind see strong gains as United States imposes a 35% tariff on textile imports from Bangladesh.
Brokerages Macquarie downgrades Pharma to an underperformed rater, also cuts its target price to 1,010 from around 1,700 earlier. The stock is down 3.5%.
Brokerage HSBC upgrades divis to buy. It raises the target price to 7,900 rupees from 5,200 earlier, expecting peptide products to lead an estimated CAGR of 23% in the next 3 financial years.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam, and as you can see, markets more or less flattish, bit of a negative bias, some kind of nervousness ahead of the official announcement coming in from President Trump, though he has sent out letters to a whole host of nations. Mangalam, when's the last time you got a letter?
I don't remember the last time I got a letter, and I hope that India doesn't get any letter from Trump. And even if they do, like a lot of the experts have been saying, that it's just a letter to invite discussions more than impose tariffs. But be that as it may, the Nifty yesterday closed 0.0 points.
Yeah.
Today as well, as we're looking at it, 16.4 points on the Nifty lower. The Nifty Bank is higher by about 0.5%, but that's a large part of that is attributed towards Kotak Mahindra Bank. The broader markets, we have the mid-cap index at an index level is down 0.4%. But your portfolio would not be feeling that bad because if you look at the advanced decline lines, they're fairly split right down the middle. You have about 1,300 stocks in the red for about 1,200 stocks in the green. So there are just a few stocks which are, taking the overall index lower. And most notable of them are from the capital market space. So Angel One, for instance, down about 4%. We also have MCX, which is down about 3.5%. So we'll keep an eye out on this space. And then you have Kalyan Jewellers. After a big move in yesterday's trading session on the back of a 31% jump that the company reported in their, first quarter, Titans reported weakness. They've spoken about volatility and consumer sentiment being fairly subdued. And we're in this phase where this quarter does not have as many festivals as the previous quarter did. Streets taking some profits back as well. Kalyan Jewellers lower. And we're also seeing some of these pharmaceutical names sell off. Lupin, Zydus Life, Granules, all of them at the low point of this morning. But on the other side, we do have a bunch of stocks which are rising. HDFC, AMC for one, is up nearly 3%. So let's get the latest on the trade talks between India and the United States. Parikshit joins in on the phone line. Parikshit, what are you gathering?
Well, we're hearing from sources that the U.S. government, especially Donald Trump and the White House, are now assessing India's proposal for a trade deal. Sources telling us that India has put a substantial and decent offer on the table, which would give access to industrial goods from the U.S. side and labor-intensive goods from the Indian side. And this proposal literally covers $150 to $200 billion worth of goods traded between those nations. What sources tell us that there cannot be any further negotiations or proposals from India's side at this stage. We've done whatever we had to. There are red lines on agriculture and dairy which we cannot cross, we cannot compromise on, not just with U.S., but with any country for that matter. So the U.S. is now assessing the kind of gains it is getting in the trade deal with India. They have to now come to the Indian government and say whether they want to accept this deal or they want further negotiations in the days to come. Sources telling us that while we are negotiating a trade deal with U.S. with full intent and effort, we're also negotiating trade deals with several other nations and looking at all options to increase our export footprint.
Have you heard anything on any letter coming to India, Parikshit, from your sources?
Well, yesterday, all the letters, there's 12 to 14 letters that were issued. They were all letters to countries with which the U.S. is not having a trade deal. Donald Trump has said that they are close to a trade deal with India. And this is what White House spokespersons have also been saying over the last few days. So far, the noises coming from the White House are very, very positive. We are, yes, expecting some sort of announcement or letter from the White House, but that will be possibly on accepting a trade deal or not.
Wonderful. And we shouldn't worry about what he has to say about BRICS, etc., right?
It's really up to Donald Trump. He has his own mind on these things. He acts unilaterally. But the fact is, what our sources have been indicating after this BRICS summit, that Donald Trump's biggest concern was around de-dollarization that is being carried out by BRICS, or the attempt by BRICS to have its own currency. None of that is on the table. There was a proposal from Russia several months ago to have a BRICS currency. There has been no headway, no discussion on that. The only thing that BRICS nations are discussing is having trade settlement in local currencies, which India and several other nations do a lot on a bilateral basis. So Donald Trump and U.S. concerns are absolutely unfounded. And even if there is a BRICS tax, they do not expect it anytime soon.
All right, take that point. Thank you so much for joining in, Parikshit, and giving us the latest on what we can expect on the India-US trade talks. But could you qualify it by saying that Donald Trump has a mind of his own and acts unilaterally when it comes to a lot of these issues as well? So let's hear out what President Donald Trump himself had to say on trade negotiations with partners, including the likes of India, after sending out a bunch of tariff letters to nearly 14 countries.
If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now, yeah.
Are the tariff letters that you sent today final offers, or are they negotiable?
More or less final offer. We've made a deal with United Kingdom. We've made a deal with China. We've made a deal. We're close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal, so we just send them a letter. If you want to play ball, you have to. This is what you have to pay. So as far as I'm concerned, we're done. We're sending out letters to various countries telling them how much tariffs they have to pay. Some will maybe adjust a little bit depending if they have a cause. We're not going to be unfair about it. And actually, it's a small fraction compared to what we should be getting. We could be asking for much more. But for the sake of relationships that we've had with a lot of really good countries, we're doing the way I do it.
All right, so that is what Donald Trump has to say. Meanwhile, just keep an eye on a couple of these pipe stocks. All of them are spiking. We have, Venus Pipes, which is up 6%. Another couple of pipe names as well, which have moved higher. Recent listing from last year, I think, Harium Pipe. That is another one which is seeing a fair amount of volume spike, and it's up around 12%. So just some sectors keep moving around left, right, and center. That's a bunch of stocks from the broader markets moving higher. Let's get in Somil Mehta of Mirae Asset Sharekhan for a quick technical check on the market. Somil, it looks like it's a individual stocks-driven market because the Nifty has been in a range, give or take all the volatility. It's tested the lower end of the range, it's tested the higher end of the range across multiple news cycles, and we still are in that range. The last couple of days, absolutely flat.
Absolutely, it's been very range bound. It's been very flat. But there's a lot of stocks which are moving and having very good run up. It's a very stock specific, very sector specific market at this point of time. Market has been Nifty has been in a very narrow range. The supports at this point of time is 25,300 and 25,200. That's a very crucial support zone at this point of time in the very short term. Anything below that will take the Nifty to 25,000. But I'm not looking at that. I'm looking at higher levels. Medium-term trend remains positive. Undertone still remains positive. I think the next target for Nifty in the short term would be 25,900. So this is the target I'm looking for in Nifty. In Bank Nifty has already started to move today because Kotak is doing good. ICICI is doing good. I'm expecting Axis and SBI to join in, HDFC Bank to join in as well. Bank Nifty has a very crucial support at 20 daily moving average, which is 56,550. That will be very crucial. And the next level in the short term would be 55,950. So these are the two levels which are very crucial as supports. I'll be looking for a target of 58,000 in the very short term. Medium term definitely looks great for Bank Nifty, but in the short term, 58,000.
Okay, got it. All right, Somil, you're sounding fairly optimistic on prospects on the indices. Got that. What about individual stocks?
So I have two stocks from the large caps. First one is ICICI Bank. ICICI Bank already started the move high top, high bottom formation, taking support at the averages. It was consolidating for a little while, but I'm expecting this consolidation to break on the upside. Stop loss would be 1420. Very good risk reward ratio at this point of time. Target would be 1500 in the short term. The next one is NTPC from the power pack. This stock has been consolidating for a little while now, from last couple of months, in fact. And now the downward sloping trend line has broken on the upside, closing about 20 and 40 daily moving average. So NTPC would be my top pick from the pack. Stop loss would be 330 and the target would be 370.
All right. Are you looking at any of the hotel stocks? Because not only do we have Schloss Hospitality doing well, that's Hotel Leela, but Lemon Tree Hotels is the other one which is spiking in trade right now. Can't see much in terms of moves for Indian hotels, marginally in the green, but there are a couple which are doing fairly well today.
Yes, ITC Hotels is my topic, actually. ITC Hotels has been making high tops, high bottom. Every time it dips, it takes support at 20 daily moving average and then resumes the uptrend. So this is my topic in the whole pack. The support would be around 217, 213 levels. That's the support zone. And I'll be looking for 270, 280 of target in the medium term outlook.
All right, take that point, Saurabh. Thank you so much for joining in and giving us individual stock ideas, even as the index is fairly range-bound. With that, we'll step into a short break. As we do that, let's tell you about the all-new CNBC TV18 Prime. It brings you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. all weekdays and weeknights.
Welcome back. Well, let's take a quick check on the markets. Not moved too much, but there are a couple of outliers. And from the Nifty pack, the top gainer is Kotak Mahindra Bank. That after it reported a strong showing in its business update. Gaurav joins us to help us out with a greater analysis. Gaurav?
Well, yes, Kotak Mahindra Bank has actually reported great set of numbers when it comes to provisional updates. And the reason being that when we look at loan book growth, that is at around 14% on a year-on-year basis. Now, let's not forget that the industry is growing in the range of 9 to 10%. Kotak Mahindra Bank is known to outperform industry, but even when we look at the consensus expectations, Kotak Mahindra Bank has outperformed the expectations as well. In terms of deposit, we are seeing 14.5% of growth on a year-on-year basis, which is again strong. It is actually led by the term deposits because CASA has actually become or remained a little softer in this quarter. But at the same time, that is not a concern because usually Q1 is weaker when it comes to CASA. Let's also not forget that we'll be watching out on what segments have grown in Kotak Mahindra Bank's loan book growth because for the last few quarters, they have been slowing down their unsecured segment. So NIMS is something that we should be watchful for. But definitely, in terms of provisional update, a great set of numbers from Kotak Mahindra Bank. And as a result, we are seeing stock is also soaring up in trade today.
Take that point up around 4%. That's the top Nifty gainer today, Gaurav. Thank you for that. But from there, let's go on to the top Nifty loser. That is Titan. Reported its first quarter updates post-market yesterday. And remember this on the back of very strong set of numbers coming in from the likes of Kalyan and Senco. Senco had a near 28% overall growth, 24% retail growth. And Kalyan Jewellers reported 31% growth. What does Titan do? Titan reported an 18% growth in their domestic jewelry business. And that's a lot lower than what the peers did. But more importantly, just a couple of weeks ago, we got a note from Macquarie and they were anticipating around 20 to 21% growth in the first quarter with better margins as well. The company is disappointed the street on those expectations too. That's not all. You know, they said that gold price volatility has affected consumer sentiment and even the studded ratio is lower. Why is that? Because of higher gold prices, customers opted for plain gold jewelry as an investment class and also looked at lower caratage of gold. And studded grew in early double digits, whereas plain gold grew in mid-teens. So as a result of which, we saw the studded ratio come down, which means that there could be a downward pressure on the margin as well. Even the buyer growth was flat year on year. Now, one of the possible reasons for this could be that, you know, Gudi Padwa this year was on 30th March, which is the fourth quarter, and the previous year was 9th April, which again is the first quarter. So as a result of which, and Titan having more exposure to Maharashtra as against, say, something like a Senco and a Kalyan, could have faced that issue. But even the buyer growth being flat is something that the street is taking note of. The other parts of the business not doing too badly. We had watches growing at 23%, decent performance for emerging markets and Carrot Lane as well as international business. Eyewear grew about 12%. So, it's a weak set if you look at the expectations and a weak set if you look at the peers, as a result of which the stock is the top Nifty loser today.
All right, well, let's turn our attention, though, to the special segment where we get you a few ideas for profit from Money Control Pro. Kanchi Shah of moneycontrol.com joins us to talk about a stock that she's tracking closely. Kanchi, take it away.
So the company that I've chosen for today is Escorts Cubita, which is a key player in India's agricultural machinery and construction equipment sector. In the month of June, the company reported a 13% increase in tractor volume over May. This improvement in sequential performance is very indicative of pickup in the rural sentiment, which is supported by early monsoon progress and pre-seasonal buying. Looking ahead to FY26, the tractor industry's outlook remains very much favorable. Industry volumes are expected to grow in the mid to high single-digit range. This growth will be underpinned by healthy reservoir levels, an increase in the minimum support price, a normal monsoon forecast, and improving terms of trade for the rural economy. However, from a market share standpoint, Escorts Cubita's share had declined to 12.4% in Q4 FY25 compared to 13.7% in Q4 FY24. The decline is largely attributable to its relatively weaker presence in the eastern and the southern region. To address this, the company is pursuing a very strategic expansion into underpenetrated markets, specifically Western, Eastern and Southern India, where it sees significant growth potential over the medium term. On the export front, the company maintains an optimistic view, where the tractors are expected to grow by 20 to 25%, aided by focused efforts in geographies such as Europe, Mexico, and South Africa. In addition, Escorts Cubita is also exploring to enter into new emerging markets, which includes Myanmar, Cambodia, and Thailand, which could act as a future growth drivers. From a valuation perspective, the stock is currently trading at a 27.8 times its projected FY27 earnings, which appears to be little elevated right now. Thus, we advise investors to accumulate this stock on price correction with a long-term horizon as the company continues to strengthen its domestic and global presence.
All right, Kanchi, thanks a lot for that. So that's about the idea for profit coming from our colleagues at Money Control Pro. With that, we'll slip into a short break. But as we do that, again, good news coming in for all you viewers, which is India's business news leader. That's CNBC TV18. Just a click away, you can see the CNBC TV18 app. It's the all-new app which gives you access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. All you got to do is just download the app from either the Apple Store or the Google Play Store. If not, then the QR code is up for you to scan and download the app.
Well, the market's sitting with a mild cut as we speak. The Nifty continues to remain a little bit lower. What's outperforming today is actually the Nifty Bank. And that's being powered ahead because of the way we have seen, Kotak Mahindra Bank perform. So that's great news. From the broader markets, a couple of stocks, though, that are calling for attention. IEX has moved a little bit higher. It was trading in the red, so that's spiked up a little bit. Motherson Wiring, let's get that one up for you on the screen. Good move is what we're seeing on that particular name as well. A bit of a perk up on that stock, so I think that should come up as well. On the flip side, Nectar Life, small company, announced a deal trying to sell some part of their business. Street doesn't like it. The stock is locked down, lower circuit, down 20% as we speak.
Nigel, a couple of these stocks call for attention from the jewelry space as well. When we looked at Titan as the top Nifty loser and we spoke about Kalyan Jewellers seeing some profit booking as well, look at PC Jeweler. When the going was good for all these updates coming in, yesterday that stock was up 10%. Now, as you look at it, it's given up all its gains, down about 10% for this week, absolutely flat. And we are seeing, increased selling in all of these capital market names as well. So 361 WAM down 5%. We spoke about Angel One, and BSE is the other one, which is down about 4.5% as well. Let's get you an exclusive story now. Sources are telling CNBC TV18 that the Sebi may consider linking options leverage to cash positions. What does this mean? How does that change your trades? Yash joins in to tell us more. Yash.
Well, Mangalam, this all seems to be a fallout of Sebi's investigation and action against Jane Street as an institution and the modus operandi of manipulating the exchange, the index rather there. What we've been given to understand from our sources is that market regulator Sebi may consider linking options market leverage to cash market positions. Now, just to simply explain the first line, it essentially means that if you only and only if you have certain amount of position when it comes to cash market, you'll be able to take a leverage equivalent to that position in the cash market as far as the options market is concerned. Now, what we've been given to understand further from our sources is that linking of options market leverage to cash positions is being done to cut down on excessive speculation. Also, options position could be linked equivalent to cash market position through a derived formula. As I said, that if you have certain amount of position as far as the cash market is concerned, only equivalent to that which will be derived through a formula, you can take the simultaneous position as far as the options market is concerned. Now, as per our sources and in very detailed fashion, what our sources tell us is there are 4 things which market regulator SEBI wants to achieve through this particular proposal. First thing is increasing cash market liquidity. Second thing, reducing options market liquidity. Third one, reducing excessive speculation and protecting retail investors. Do remember there was a report which came out yesterday which spoke about losses made by retail investors. So that is one another intention from SEBI, that is protecting retail investors. And the fourth point which it wants to achieve is cut down on the ability of institutions like Jane Street to make fast money through manipulation, as SEBI calls it. Now, what we've been given to understand further than that is that the proposal to link options market exposure or leverage to cash market position could come up for board discussion very, very soon. The market regulator may also discuss other possible steps to identify and plug more loopholes when it comes to manipulation of options market through heavy capital being deployed. Now, apart from that, SEBI is also considering increasing cash market volume through allowing, and this is a consideration at this point of time, through allowing shorting in cash market as well as enhancing the SLBM, which is, loan against shares mechanism as well.
That point, Yash. Thank you so much for bringing us up to speed with what the SEBI is considering right now. While Yash was speaking, you could also see visuals of Ramdev Agarwal, who's joining in as a guest editor very, very shortly on CNBC TV18. He's entered the CNBC TV18 headquarters. In just a minute after this short break, you will have Ramdev Agarwal. Joining him will be Pranav Haldia, Rahul Saraf, Firoz Aziz. We'll speak about the markets, IPOs, promoters and PE exits. More importantly, the rise of family offices, what it means for wealth creation and how the situation is likely to pan out. You can see him walking into our studio. So all you got to do is just stay tuned to CNBC TV18. We'll take your leave on this edition of Chartbusters as Ramdev Agarwal, our guest editor, enters the studio. Take a short break. On the other side, you will hear from the man himself, Ramdev Agarwal.